Welcome to the Bound to be Rich podcast, where I attempt to reverse engineer people who seem to be successful no matter the circumstances so that you can apply those lessons to your own life. I'm your host, Ismail Himet. One quick thing before we get started. I am starting my own email newsletter and I would love for you to join it. It's going to be like a personal note for me to my friends of all the best things I've come across that month. From hacks and tips, interesting stories, products, books, ways to make money, and who knows what else. It's totally free. And if you don't like it, you can always opt out at any time, so there's no downside. The link to join is in the show notes, and I hope to see you on the list. In this episode, we are joined by the Nomad Trader. Nomad is getting very well known due to a $10,000 rapid flow challenge that he started. He focuses on low-risk trades with small returns, but he's proven that those small gains compound over time. At the time of the conversation, he had taken his initial $10,000 to $250,000 within 13 weeks. Since then, he's continued and is now up to $350,000 at 16 weeks. As he told me in this episode, he's going to take it to $1 million, and I have no doubt of that. Nomad is someone who has actually had a big impact on my path as a trader because he's incredibly transparent. He shares the entry and exit of every single trade he takes so that you can analyze when exactly he took profits and or when he cut losses. Most other traders only show you their total profit numbers on winning trades, but that really isn't that helpful to learn from. Prior to the Nomad, I always wondered what percent returns profitable traders actually targeted. We dig into his journey as a trader, and we discuss a ton of things like what makes a trader successful, why do most people lose money, what are realistic returns to target, his advice to aspiring traders, and much, much more. Let's dive in. Nomad, thank you so much for making the time and joining us. I really appreciate you being here.
Appreciate you having me. I've listened to a couple of your other episodes, and they're very, very informative. I appreciate how you take this forum, you take this medium, and you try to generally go out and try to help people and try to help those out there who are looking to learn, looking to educate themselves. So I am all about that. So anything I can do to help.
Thank you for saying that. It's funny. It started with I like having these conversations all the time, and then people said, "Hey, you should put it out there. People will get value out of it." So I did like a test run of like 5 episodes, and people liked it. I guess they like the way I ask questions or what I go into because I am kind of representing the audience member, right? So I come at things with a fresh mindset and ask questions that I think the audience would have. It's this thing called the curse of knowledge, right? Where I find this all the time. Like people that know, for example, like you, how to trade or whatever it may be, once you're in that position of knowing, it's a lot harder to remember how it was not knowing. There's like a gap there. But I appreciate the kind words, and I'm excited to dive in. I guess just to set it up, would you mind giving us a little bit about a background about yourself and I guess what you did before you became the Nomad?
Yeah, no worries. Because at my core, I am a serial entrepreneur. I love businesses. Funny thing is, I used to be a professional gambler, and I think a lot of times that actually helps, especially with the mentality and approach for trading, not just the actual trades, but like I said, the mindset and the bankroll management, which is so important for a lot of people. And I also invested a lot in real estate back in the day. I love cash producing assets as well as fix and flips. And then a few years ago, I kind of started building some funds, some real estate funds. But really, my true passion is still getting back to kind of building businesses. And so the last really since maybe 6 months before pandemic, I really started to grow as a venture capitalist. And I've invested and helped a lot of small startups. Some successes, definitely some failures for sure. But I've been involved in a lot of in the full gamut of businesses. I mean, my gosh, like jerky, whiskey, social dating apps for specific. It's been a crazy thing. But during the pandemic, I started really figuring out that, like everybody else in America 2.0, I didn't have to go anywhere to do all these things. So I started just kind of traveling, and then I kind of picked up trading at the end of last year. And to be honest, I didn't even know what an option was a year ago in fall. And one of my buddies who I know trades all the time, I remember we were actually smoking cigars, and I was kind of telling him like, oh yeah, he was saying, hey, I just traded Tesla and I made X gains or whatever. I'm like, oh, that's cool. How would you make that on a multiple? Because, if I buy a share of Tesla, how is that possible? And he's kind of explaining to me options. And I started really kind of getting hooked. And because before I was just trading shares, and it was nice because I could use margin, of course. But, the option game is definitely something for me. And I think for a lot of people that I've kind of encountered, even through, kind of our Twitter world and through the TFC Discord and some of the other kind of communities, I think the classic trader, as we're kind of getting to know, is very analytical, very engineer in mindset, and very entrepreneurial in spirit. And I think the options world really appeals to us. And so like anything else, I'm a total type A, 100% personality guy. So beginning of the year, I dove in and just started really researching everything. I could not get enough information. And I stumbled across the TFC group, and they've just been incredible to work with. I mean, I belong, full disclosure, I belong to multiple Discords. I follow multiple FinTwit traders and pros, but I definitely glean the most knowledge and actionable intelligence and information and data from TFC for sure. But to kind of bring it full circle, I started trading full time in January of this year. I hired a kind of an operations manager to manage a lot of my personal businesses I was involved with. I shrunk my physical footstep I have a couple offices throughout the United States. I shrunk those the physical footsteps. And, during this time, I really wanted to look back on this pandemic years, later on in life, maybe when I'm a grandfather or something, and I'm bouncing my kid on my knee. I can be like, hey, remember that the great pandemic of 2020, this is what your grandfather did. And so I sold my beloved beach house in Southern California, and I've literally been going from basically Airbnb to Airbnb since, and I trade. And so again, like, obviously we just had a little bit of technical issues before even this kind of thing, and you had it very succinctly, which is, this is the one cost of nomadic life, right? You don't have all this stuff in front of you.
Yeah. I mean, there's pros and cons, but I think there's a lot more pros. You mentioned there's so many rabbit holes to go into with what you said, but I just want to echo what you said about the Financial Cloud, the TFC group. I'm also I've been in a number of Discord groups, and like, I have a group of friends that follow me into different groups, or I join their groups, and we all agree, like, it's just something about it. It's just different than all the other groups out there. There's more education. You get to know the people. For me, I like listening to people live, because trading's kind of lonely, right? You're kind of alone on the computer all day, and hearing people talk about things they're seeing or how they're looking at things during the trading day makes you feel a little less lonely. So for me, that's the most valuable thing. But one thing I'm just curious about is, you said you were a professional gambler. What did you play?
Poker and sports betting.
And why'd you get out of that? Was it not as fruitful as the other things?
It doesn't really look good on a resume when you have a gap in employment and you have to explain to people how you were actually making money. It's a little awkward at times, to be honest. And, I may have been, maybe that during that time I might have been dating, and it's not the best occupation to roll out. I mean, it's sexy for a single guy for sure. Yeah, I just wanted to kind of get on and started building some stuff. And the thing with any type of gambling is, it's still active, right? You cannot build passive income off that. And so what I wanted to do was spend some time building out passive income strategies. And so I'd have cash flow on a monthly basis, right? Because, as one of my mentors would always tell me is, Nomad, you ain't making money unless you're making money while you're sleeping. And although gambling was fun, you still had to, apply the work, much like trading. But I also wanted to get to something I was passionate about. So,
yeah. So, just quickly, like, to echo some things that I relate to with your story, is that I also have a background in real estate. I fixed and flipped properties in my area in Long Island, New York.
Oh, wow.
Yeah, it's become very difficult lately. So that's kind of been put on the back burner because of the market conditions. I worked in Wall Street at real estate finance firms, so I have that analytical mindset. Like, before I got into trading, I was really a value investor, looking at cash flows and analyzing things that way. I think the pandemic and the way the market shifted kind of sucked us all into the trading world. Because before that, you know, it's really all about investing, and making 10% a year was considered amazing. And now you make 10% in a few minutes or a couple hours, and it's not enough, right? So it's just a total shift that I've seen. But I totally agree with you, because I've had some crazy wins trading. And like, some of my friends are like, why are you doing all this other stuff? If you're making so much money trading, why even bother with these other things? But my whole goal is what you just said, right? Trading is great, but it's unpredictable. You can have up days, down days. You don't know how much you'll make some days. So covering your living expenses with like consistent cash flow is what I'm focused on. And you mentioned Airbnb as a guest. I've interviewed some people about this recently. It's something that I'm looking at. I don't know if you have experience with this in real estate. Is I'm looking to throw some of my gains into acquiring vacation rental properties so that I can use them myself when they're not occupied, but that they would also give off that cash flow to cover my living expenses. While, like, my ideal scenario is that my expenses are covered and I get to interview people all day and trade all day. Like, that's the ideal life for me at this point. Have you like looked into Airbnb investing or anything like that, or are you more of the traditional real estate long-term rental investing with your funds?
So I have multiple funds. One fund actually does short-term rentals, and we put, I did an Airbnb in there. It was a beach Airbnb. It was, we picked it up. It was actually on the coast, and so obviously there's only so many of those. And man, those are very, very lucrative, right? Because they're always rented, and no one could have predicted the migration during the pandemic of everybody wanted Airbnbs versus hotels because of the unsureness of cleanliness and all the other stuff, whatever it was. But I'm a big fan of Airbnb, not just their stock, but also the general principle of the Airbnb. Because generally when you're doing the short term rentals, if you build a good following, right, and you're gonna have to pay your dues through Airbnb your first year or two, and you're gonna have to pay them their fees or whatever. But after a while, you can build your own guest list if you have unique properties, beachfront, lakefront. Obviously 5 bedrooms plus, so people can do family gatherings or corporate retreats, and also pick them in places that are going to have good tax policy. Like, to be honest, I started to liquidate out of California just because of the tax policies that were out there and the tax policies on the horizon. And I'm sure you have the same kind of obstacles coming up in New York, because I know they're the same way. But also places like Florida are blowing up, Texas coastal, Corpus Christi are blowing up, and places like Puerto Rico, right? So, and especially as we're making these gains on the daily trading, we have to be cognizant of our tax implications, because real estate, you get all sorts of cool tax tools to help, mitigate tax liability. Trading is not that way. It's capital gains, and that's what it is. So it's a little different, and it's something we all have to be a little aware of. But to answer your question specifically, I've dabbled in it for sure. It's not as I prefer focusing more on secondary and tertiary markets that have high employment and high cost of new housing, because generally in those regions you have you're always going to have, because you have good employment, you're always going to have people looking for housing, and especially in this environment, there's not a lot of rental housing available in some of these places. So in the last couple of years, I've really, I was into Austin, but I've already sold out because that thing topped out. It was literally like a wave. It was literally like wave 5 in Austin right now once Tesla came in there. I still have some stuff in Central California because there's a lot of, that's really the only affordable place left in California. Big fan still in Detroit, especially around the downtown area. I'm not sure if you've been there recently, but they're really, Dan Gilbert, who owns the Cavaliers, he moved Quicken. He moved Quicken to downtown Detroit and bought all these buildings in the downtown area. And he basically made all their development in like a spoke fashion. And so I try to buy as many assets that are within a half mile or a mile of downtown for that young professional that maybe doesn't want to buy a house yet because they're the ones that saw their parents go through short sale or foreclosure during the Great Recession. And they're kind of like, ooh, I'm not sure if I want to buy a house yet. I just kind of want to rent, but I want a nice place. And I want to be close to downtown so I can go down and have my craft beer and hang out with Ismail so I can listen to TFC live.
Obviously we want to dive into trading, but I would regret it if I didn't ask you, because you have a lot of experience, it seems like, in this area. So 2 questions. What's your stance overall on the real estate market? People think it's going to crash. People don't think it's going to crash. I'm curious what you think there. And if you have any advice for people listening that have money to invest, where should they put it? Real estate? Like, how do you invest? Do you have it in crypto? Like, how do you think about investing, and how do you think about the real estate market in general?
So the real estate market in general. So right now, I've really pushed a lot of assets into short-term product, whether that's fix and flip or maybe I'm buying. So about 6 to 8 months ago, I really put my team out to find what I call the small mom and pop investors, because they were the ones that were really kind of getting screwed through this whole thing. Because if you're a tenant, you were getting help from the government, you're getting help from their state, you're getting help from the housing authority. If you're a big multinational corporation like BlackRock or anything like that, you're getting all sorts of tax breaks. You're getting, obviously, there's all sorts of help for these guys during the pandemic to reclaim lost revenue. But that margin in the middle, the small mom and pop investor who was buying that fourplex because that was their retirement, or they're buying that duplex so they could put their kid in there, while they're going to college and they rent the other side. Those are the ones that weren't getting rent. And a lot of these markets, they're still not getting rent, but they're also that category of investor. They're still concerned about their credit score, but there's no help for them right now. And it's only just now starting to come out for them, where a lot of these state and municipalities are having like a fund set aside to kind of help them catch up, because they realize, oh my gosh, at some point, these guys, they're paying this extra mortgage payment every month because it's an investment that they don't want to give up, because they put 20% into it. So they have equity in there and they don't want to give it up, but they can't sell it because they have an unruly, unpaying tenant in there. So to be honest, we really targeted that segment over the last, 6 to 8 months, because that was a really, really, I thought it was very untouched segment. And I bet you have some in New York, and I bet you have in your area. I would look at like, not necessarily New York. I'd probably look more in maybe like Pennsylvania. Obviously, Nashville's popping, but I think that's maybe in the sixth or seventh inning right now. I really think Florida, Texas are really still going to be valid, just because of the incoming population growth and the type of jobs that are coming into there. Texas, you got to be concerned with, because it's, even though there's no state income tax, the freaking property taxes are 3x over most of the nation. So what I've found that's been a little bit better, and one of the funds I'm actually currently actively building out right now, is a short-term, almost like a private money fund, because now we have contacts in all these different markets across the nation, and people are always coming to us and be like, "Hey, I need funding for this project." I'm like, "Oh, that's really cool." So how do you want us to engage? You want a straight debt execution where we can loan you X and you pay us off interest plus some fees, or do you want like a JV partner, or do you want a combination thereof? And so that's been actually pretty lucrative lately, because one of the things I think is very, very dangerous for people that want to just get into real estate in general, and I know BlackRock really knows this now, is real estate. Actually, in Zillow, ironically, Zillow just found this out the hard way too, is real estate is so hyper localized. You cannot build this giant national process and be very, very effective with real estate if you're going to do, things like fix and flip. If you're doing long-term tenant, long-term rental cash flow, that's one thing. But these short-term spikes of, these cash events, it's a little more difficult to manage from one central office. You have to have boots on the ground. And so back to the fund, is I think this latest fund that I'm building out, I think it'll be one of the best opportunities, because it'll allow people that have cash sitting on the sidelines to put cash into a centralized place, get a very high rate of return. And in general, we're basically partnering with people that are local in their own markets, because you and I both know, especially if you're in real estate, Ismail, is that you have to be in that market to understand all the nuances of neighborhoods, all the nuances of hiring vendors, even the eviction laws and how to get things done. And so versus trying to build this gigantic process that's almost like this, it'd be like a huge ship. I want a fleet of small, agile sailboats.
Yeah, I mean, one other thing before I forget, that was a commonality, is that you mentioned venture capital investing. I also have built my own software products, and I actually just had one acquired, a B2B SaaS product. So that was another commonality that I saw in as well.
Congratulations.
Thank you.
Hey, only a few people understand how awesome that really is, because everybody wants, man, that's sexy, right? Like, oh yeah, I built X out and I sold it out. Everyone's like, I can do that in my spare time. I'm going to learn Java and do this or whatever, right? But you and I both know the hoops you had to jump through to get to that point.
Oh God, yeah. You know what? That tells you that you have experience, because a lot of people that I talk to, like friends, are like, "Oh yeah, that's nice, congratulations," and they have no idea the blood, sweat, and tears. My first product that I built years ago was a failure, so this is my second go ahead. It's not easy. People think, "Oh yeah, I'll just build a software product." It's really not easy. There's a lot that goes with it. So I'm glad that you understand that. I'm sure you've seen that with your investments as well. But there's something about us, right? We like the pain. We enjoy it.
Yeah,
so.
but hey, without that, and this is one of the big things I always tell my teams and people I mentor all the time is, hey, you have to welcome adversity. If you shy away from adversity, you're never, ever going to grow. Like nothing grows in comfort zones, and adversity sharpens you. And the two things that always reveal character, are adversity and money. And when those two things go hand in hand, you really figure out what somebody's about.
I could not agree with you more. This is like an aside, but I actually was organizing my first business conference in New York. My listeners know this, the TWA Hotel by JFK Airport. Maybe you've been there. So that was scheduled to happen literally the week after the world shut down because of COVID in March. So
wow.
That you talk about adversity. All these vendors, all these attendees, refunding people, even though I didn't get refunded from the venue, like all that stuff that went along with it, that was my guiding principle. Do the right thing, because people will remember you, and that'll come back to you in the future if you treat it the right way. If you start treating people badly, not refunding them, or doing shady stuff, you're done. But if you do things the right way, you can come back next year or the year after, or do something else in the future. So I think that reputation and dealing with the adversity is very important.
I 100% agree. As my mentor would always just hammer into me is, you can always make more money, but you can never get back your reputational capital. Your reputation is your true currency.
Yep. Well, one other quick question before we dive into the trading is, you're obviously well-traveled. Where is the best place in the world to trade from?
So the last 6 months, man, I've been on a whirlwind. In fact, I traded from a houseboat last week. That was actually a new experience. I've never actually had trading on satellite. It actually honestly kind of sucked, because it didn't go as fast as I would like. But for me personally, so far, it has been Switzerland. I went to Switzerland about a month and a half ago, 2 months, something like that. It was just kind of a last minute thing. I was like, you know what? I'm going to go out and hike in the morning and have a beer and brat for lunch, and listen to some yodeling in the early afternoon, and then you can trade from 3 o'clock to 9:30 their time. I mean, how awesome is that?
That sounds perfect. I mean, I actually have a friend that goes to Spain periodically that trades, and he said the same thing, that time difference is amazing, because you can have your day of activities or whatever you want to do, trade, and then you still have time to go out and enjoy the nightlife as well, and you can sleep in. So it seems like the ideal time frame in the whole world for trading, right? Kind of.
Trust me. And no, absolutely. I didn't even realize, I kind of thought about it, but in fact, it was funny because I felt so incredibly blessed when I was out there. I started my Twitter account, the Nomad Trader 8. I actually started that from a cafe in Zurich after I made a Tesla trade, a rapid flow trade to be exact. I remember trading it and going, okay, how awesome is this? I'm literally sitting in a cafe sipping espresso because I'm an espresso junkie. And I just did this. I go, anyone could do this. Like, I'm not special. I just study, and I have these great alerts, and I have this great Discord and these great, these tools that anyone could do. And I'm literally sitting here and making as much or more than if I was back in the United States. And so I never forget September 1st of this year, I started my Twitter account, and I just wanted to kind of share all of my experiences, not just the trading experiences, but also the places where I'm trading.
So, all right, I'm glad that we're segueing into this, because I think this is what everyone wants to hear. I guess let me set it up this way before, because you've had a crazy successful story that we want to learn how you did it. But I'm thinking about the listener that hears your background, successful real estate guy, venture capitalist. he's a unicorn, this guy. I don't know the story of your journey. Can you tell us how it was in the beginning? Like, a lot of people seem to have a trouble picking it up. They blow accounts, and then they start to get it. Did you have a similar experience, or did you just get it off the bat?
Well, remember, I started to trade shares at first, and I'm very capital conservative, to be honest. But it definitely didn't grow like I thought it would. And fortunately, I didn't blow up an account like I keep hearing about. But I definitely I encountered a lot of obstacles. One of the main reasons why I wanted to push out my Twitter specifically was so other people wouldn't encounter that. One of my biggest pet peeves that I always had, because like anyone else, when I started realizing, oh my gosh, the world of options, this is freaking awesome. And so I started following a lot of these big FinTwit guys, and some of them, they'd be like, okay, I'm getting in this position. Of course, I'm new. I'm like, okay, cool, I'm jumping in too, right? Yay, I have a position. And because there's a couple of these guys, when they win, oh my gosh, they get like 50 tweets on this one win, and they're like, I'm buying a Lambo, I'm buying a train or a yacht. Where are we going? Showing off all these jewelry and stuff. And I'm like, yes, that's what I want. And so on those, it's easy to figure out when they exit, but it's the other ones, right? Because no one wins 100% of the time. It's impossible. And so I remember specifically my account wouldn't grow, and I couldn't figure out why. Because I'm like, dude, I'm getting some of these big bangers. I'm like, I got that. So why is my account overall not growing? And I figured out, because I had these other ones that these same FinTwit guys would call out, but they tended to forget to let you know when they exited. And that would always be my biggest pet peeve. It would be every once in a while, like on a Friday, 5 minutes before market close, they would have this one quick tweet or a message. Oh, by the way, I exited these 4 positions. Okay, bye. And that's it, right? Like, no one's going to see that because you're already in the heat of the moment trying to do your zero DTE Fridays. So it just kind of gets lost. And, that was super annoying. So the transparency thing was just really, really annoying to me. It really kind of set me off because, we're all trying to help each other. What I love about this kind of retail trading phenomenon is that it's not competitive. It's truly collaborative. Everybody wants to help each other. And I love that. I mean, I am, and it's like, this, being in real estate, that is a freaking dog eat dog world. And if you're not eating, you are being eaten. There is nothing in the middle. And so I see a lot of people, it's hard to make that transition from, say, real estate or insurance or some of these other people I've kind of met, because they're so used to being competitive and guarding all their stuff and keeping it closed in their trunks with a key locked and swallowing it type of thing. But what I've learned, especially from this TFC Discord, is, and you touched on it earlier, is the people that are in there, the traders that are in there, especially their founder, Tamikaze, the guy is unbelievably unselfish. I mean, he will just bend over backwards to try to help other people succeed. When he says, I want everyone to make money, he truly believes it. When I hear that with some other people, you're kind of like, okay, cool. That sounds great. That's a great soundbite, but I don't really believe you. But that's not the case here.
I agree with you. And like a recent thing that happened in the group was the BGFV trade, right? And you could see, like,
yes,
Tom almost. I'm sure he's happy that he's making money, but he was so much more happier that everybody else that followed him was making him money. And I think that is a rare quality, right? So he was really overjoyed that everybody was having fun together and everyone was making money together. The problem that you alluded to is that it doesn't go forever, right? So eventually you have to take the profits and cut it, or cut the losses, right? And a lot of these people that I used to follow as well, they don't tell you that because it's like a shameful moment. And even Tom, it's like, all right, I guess BGFV is dead. I guess that trade's over. On to the next one. It's like a shameful thing. But to me, it's not, right? You have to be real. And we all had a wild, amazing ride. Everybody should have made some money, There's no shame in it. Why
people, there isn't. But this is all why people need to scale out. And this is why I'm also a big advocate. And one day I am going to write a book about how life mirrors the stock market. And in the stock market, right, we can't have a big, fat, net, huge gainer unless there's consolidation. We can't have 100%er unless it retests the breakout. We can't just have something go up and up and up and up forever, because it's just going to come down and down and down. right? What goes up that fast comes down. You have to have consolidation. You have to retest. You have to have these things in order to have a bigger breakout. And so what I think a lot of people, their mistake, and I was that way as well, is you expect to hit these gains so right off the gate, and they just don't happen. In fact, as a side note, for me, one of the things I can't stand hearing is the term diamond hands and paper hands. I personally think diamond hands has made way too many people poor or blow up their accounts because maybe they might be up 15-20%, but they're like, no, man, I got a hold. I want that moniker. I want to be called diamond hands. I don't want to be called paper hands. I'm like, honestly, there is no shame in paper hands. If you can do that 9 out of 10 times, I assure you make a whole lot more than the one guy who keeps the one play that, yeah, it went to 500%, but it took you 15 losses to get there. And in fact, with those 15 losses, I bet you were up in most of them at one point.
Yeah, I mean, it's this recent phenomenon, right? So like I've got friends that got the Shiba Inu coin and they're up 500% in like a week. And they're like, nah, bro, it's going to the moon. I'm like, dude, you just 5x your money in like 3 days. You at least take some off the table. Take your money off the table, or take like half the gains off the table and let the rest ride. But don't let the whole thing ride. Like, it's got to come back down. And then inevitably it comes back down and they put their head down like, nah, it'll come back one day, bro. I'm going to hold the diamond hands for life. And I'm like, my goodness.
I'm telling you, that diamond hands moniker, and paper hands for that matter, I think those have really impacted some of these younger traders, because remember, these younger traders are coming through they're the video game generation, right? They're gamers, and they want and for them and for this generation, it's more important to have a reputation in some of these things than it is for actual results, right? They want that badge of honor. They want that 1,000% badge, and they're willing to freaking blow up 5 and 6 accounts to get that one play, because that's all they want, was to have their name changed to a different color, or get some badge, or be able to repost something on their social media. And that's a shame.
I mean, that's honestly one of the things I truly appreciate about you. And like I mentioned in the intro, your story of taking in a $10,000 account. I think it's over $250,000 now in less than 3 months, or about 3 months, and still going. You show the actual percentage gains that you make on every trade, or losses, because I think too many people are fascinated with like 1,000% banger, or I got to get over 100%, when in reality, people are taking profits at 5, 6, 7, 10, 12, 15%, and that's how you have a successful trader, not waiting for these crazy numbers. So I love that transparency. But before we talk about the dynamics of what you're doing, can you just explain to people, like, what is this rapid flow? Like, people that are not in the Discord group, that have no idea what you're talking about, what is it? How does it work?
So this rapid flow, and by the way, there's a baby one coming up that I'm starting to love, and I think you love it too. It's called Nimbus. I'm starting to really fall in love with that one too, the Nimbus alert. But this rapid flow alert was invented. It was actually coded by ATM. I think it's Avery in the Discord, and the dude is just incredibly bright. And he and Tom got together and just created this alert that basically triggers when there's these unusual spikes on a certain ticker at a certain price in a certain way. When there's multiple orders, or there's just an unusual, it sets off certain metrics. And I'm sure you understand. They don't even tell me, right? I have no idea. I know there's some secret sauce. There's a lot of metrics that go into it. But when it triggers, all I know is they've been very, very successful. Because for me, I interpret it as some big player out there, or maybe an algorithm, or maybe a fund. They have internals that something hits and they make an automatic buy, and then maybe they're trying to hide these buys over the course of multiple buys. But these alerts are smart enough to pick this thing up, and these guys are bright enough to kind of weed through all of the kind of smoke screens that are sent out sometimes, and consolidate all of that into one alert that we can play, that's actionable. And so there's a lot more to it than that. I'm just trying to give you the general overview. So in essence, it's a highly unusual position that was taken in a particular option contract at a very particular price, with or without catalyst. I mean, it's been fascinating. And so to kind of start off on, would you like me to go into kind of the history with the rapid flow?
Yeah, I'm curious why, like, what did you see to make you say, you know what, I'm going to start a challenge and put $10,000 into a separate account and just follow these? Like, what did you see that made you want to start that?
So I remember talking to them, and I was like, "What is this rapid flow?" And I remember they were testing out all this stuff on their server, and they had, they have another alert called, I think it's Super Fortuna, and they have some of these other alerts. And honestly, I didn't know the difference between them. I'm like, okay, this one sounds cool. This one sounds cool. Rapid flow, that sounds cool. Let me try this one. I remember the first one I did. I was like, oh man, that actually hit pretty quick. And I hit like two or three of them, and I was like, this is kind of fascinating. And I looked at those two or three, and like an idiot, one of them, I was like, oh my God, this went up to like 25% so quick. I think it was Tesla, to be honest. And it was like in mid-August. And it went up to like 25%. I'm like, oh yeah, baby, I'm not going to paper hand this. I'm going to let this go all the way through. And what happened? Freaking not only went to zero, it went negative. So I actually lost money on the trade. And I treat every dollar I have like a soldier. And I do not want to sacrifice my soldiers unless I'm getting return out of it. If I'm not capturing land or fortifying something or progressing or just advancing my cause, my army, my force, my empire, then I don't want to sacrifice the lives of my soldier. And I really, truly treat each dollar like that way. So I remember that one, and it just pissed me off. So I looked at all three of those trades. I remember, and I was like, okay, each one of these hit at least 10%. So you know what? On the next one, I'm just going to try it. And I tried it a couple times, and man, it was working like a charm. When I first started, I would do, and this is before the $10,000 thing. I would just do, okay, I'm going to do $2,000 play, whatever that buys, and I'm going to say it was, Tesla, right? So I bought whatever the strike was. Maybe it was $1,000. Okay, so I'm buying two contracts at $1,000 each. And as soon as I buy it, whatever my cost was, maybe it's a 100 or 1,000. I set my limit sell immediately at 110 or $1,100. So I was making 10%, and I started noticing that every single one of them would be hitting. I literally did nothing. I would buy it, and then I would literally set the limit sell, and it would just all of a sudden it would just disappear off my screen, and it'd be like, oh, congratulations, you just sold this for whatever. And I was like, okay, this is fascinating. Then I started really looking at them. And then on August 25th, I told these guys, I'm like, I'm going to start this thing called Rapid Flow Challenge. May I have your permission to to put this on a thread, because I think other people might be interested in this. I mean, it's not sexy, right? It's not going to be these 100% gainers. It's going to be really, vanilla. I'm going to shoot for 10%, and I'm just going to see if I can grow this. And Tom was really, really cool, because honestly, he probably wanted to see how his alerts went, and so did Avery. And so on August 25th, I put $10,000. I use Thinkorswim, TD Ameritrade, and so I have 3 accounts with them now. So I have my day trade account, I have my long-term account, and I have my rapid flow account. And I link them all because I use TD because it's easy to switch between them. So I put $10,000 in a separate one, and I was like, all right, here we go. What, in fact, as I'm talking to you, I'm pulling up my very first trade, because I actually record everything. So I'm super curious. And so I can go back through and do really cool stats. Like, I'm not sure if you know this, Ismail, but Amazon, including today's success win, is 12-0 in the month of November. So that means if we get an Amazon rapid flow, it's 12-0 in the month of November. So it's high probability it's going to be successful again. But let me pull this up.
So while you're pulling that out, this is why I highly suggest everybody listening follows you on Twitter, because unlike other people, you literally document every single trade every day, when you enter, when you exit, and you have like a history so people can see how exactly that $10,000 that you started with grew to $250,000, and I assume will keep growing. And every trade that was a win, every trade that was a loss, I think your percentage of success is like 90% or higher.
It's 88, but yeah. It's substantial for sure. And some I didn't hold long enough, to be honest. But I set rules for myself, like any good entrepreneur would, which is these are the rules, and I'm not going to break these. Like, I didn't want to hold for more than a couple days. If it broke support, I'm cutting. Just these different things.
And now a quick message from our sponsors. If you are a trader or interested in trading, I strongly recommend you check out the Financial Cloud. I've personally spent a lot of time in the last couple of years learning trading, following different people, and joining different groups. But as soon as I joined the Financial Cloud, I was blown away and immediately knew this was the best resource out there. It was like finding a diamond in the rough, especially in the world of trading where there's a lot of charlatans out there. I'm such a fan that this is actually the only ad where I personally reached out and requested that they let me promote them. So that should say something. I attribute a lot of my own success in trading to the Financial Cloud, and I love the team there, so I'm more than happy to help spread the word. I've also got several of my family and friends to join. My favorite feature is the live chat. So for literally the entire market day, I'm listening to professional traders calling out plays and describing what they're seeing. There are also algorithms they've built that notice unusual activity and instantly call them out to alert you. And I'll admit I was skeptical about bots at first until I saw how effective they were. So believe it or not, these plays are now the core of my trading. And of course, there's also the Discord group with a huge active community, nonstop education and classes offered as well. Quite honestly, they do not charge enough for all the value they provide. Sign up via the link in the show notes to get a 7-day free trial and 50% off your first month. Or you can just use promo code RICH, R-I-C-H. And within that time period, you'll know if it's worth it. In my experience, it's been a total no-brainer. All right, let's get back to the show. You mentioned it's not like exciting, these 10% gains. And I talked about Tom about this in my interview with him, is that I truly believe literally almost every single trade I've ever made in my life was up 10% at least at some point. The problem is that people don't take it, right? Because they want more. And I had a TikTok clip that went viral that was pretty much showing you how, this is an extreme example, but if you take $1,000 and you just get 10% return on that thousand on the full account, after 100 trades of getting 10%, you're up to $1 million. Now, obviously, you're not going to win every trade, but it just shows you the power of compounding these small wins, and you don't have to go for these gigantic bangers. But again, so my question to you is, how do you mentally keep yourself in check to take that 10% when you see things going crazy? Like today, I told you, I took the Amazon one. You know, I took the small gain, and then you see it continue for another $100 win for the rest of the day, and you see how much you could have made. How do you mentally deal with that? Do you just not look at it? Like, how do you cope with that?
So, and that's a really, really good question, because, you know, when I first started this challenge in August, I literally would just set it and go, right? I was literally, because I started with $10,000 and each play was up to $5,000. And I literally would just put 5,000 in, try to get to $500 and then cash out. But obviously there was runners then, like there are runners now. I definitely advanced the trading, kind of my trading process into rapid flows these days. So the Nomad Trader kind of plan for today for rapid flows is, you know, I'll still, so now so the account's like 250, it hit like 265 today, I think it was. So now that means I'll literally put up to maybe 70,000 on each play. That doesn't say I'm putting 70,000 immediately on a play. And I get it. I totally have the flexibility to do this now. So today, the big win I had today was NVIDIA, right? NVIDIA Rapids. And I'll tell you, in that trade plan, I'll tell you exactly how that one went. So NVIDIA Rapid came out, and I believe there was an NVIDIA Rapid that came out right after it. So I'm like, oh my gosh, a double rapid on the same ticker with some unusual call flow and some other minor alerts that hit on the same ticker. And obviously with a giant catalyst that just happened on their earnings, this is something I want to get in. So, because usually what I'll do is I'll start with a quarter position. So say my max entry is, we'll make numbers easy. My max entry is $60,000, right? So if I'm at a $60,000 clip, I'm putting a third in right off the bat. Okay, the thing hit, great, $20,000 immediate buy. And then I'm watching the candles, right? And I watch the 3-minute candles. If they're really, if those candle bodies are just firing up with no wicks and they're just pushing up the top and there's a lot of buy pressure, man, I'm doing another 20. And then I reserve some more so I can average down if it hits. But in this case, I actually averaged up because NVIDIA was just going, if you remember this morning. So my initial position, I bought in at 20, bought an average up again at 20, was watching it, and then bam, it hit. Now it continued on this incredible ascent. So I actually averaged up, but this time I picked a different strike. And then when my first position hit, I think it was 15%, I liquidated 75% of the total position. So I banked those profits, and then my last 25%, I basically start doing as a trailing profit stop. So in that case, say I was up, say those contracts are, $6. So I put a trailing stop, roughly, I called it about 10%. So maybe I'll start off at 550, and I literally manually will trail it up. I know Thinkorswim has a way you can do the trailing stops, but with the 25%, I like to actually watch it go up, right? I've already and what's nice is I've already made the money, right? The 75% I've already hit. I'm good on that. So now these other ones, I'm just trying to maximize these runners, and this will answer your earlier question, which is I've noticed that this gets me out of the FOMO stage, because if I'm still engaged in it, and 25% of that position is still a substantial amount of money that was at risk, but because I was running a trailing profit stop, I wasn't going to lose money, right? And all I did was just keep moving my stops up. Every time it would spike in a candle, I keep moving my stops up, and finally, it peaked and dropped down and wicked my stop, and I was out, and I moved to the next trade.
Are you? I know that Thinkorswim does have the trailing stop limit order, which I honestly haven't used as much because it's not as convenient to get to. Do you have the active trader up, and you're like manually moving up the last 25% as it keeps going up?
No, and that's something I need to get better at doing. I know there's a trader in the server. His name is Dapper, and he's exceptional. I've watched one of his classes on how to properly maximize the Thinkorswim, and I should probably do that. But no, I literally manually move up my stops.
And then once it goes back down and hits it, that's it. You're strict about it. You let it go because.
I let it go, but here's the other thing. For me, I literally close the window because I'm sure like every other trader, I have 4 screens, but I close the window that particular ticker was in, and I just don't go back unless another alert hits. If another alert hits, I start the process over. Like today, I think I traded Amazon 3 times. I can't remember what my trades were today, but yeah. So there was an Amazon rapid flow and Apple. So there was an Apple rapid flow in the beginning that hit 12, 15% pretty easy, and then we had the trailing profits run. Maybe total was like maybe 16, 17% overall, but then the 2 Nimbuses hit later in the day. And so for me, psychologically, every time I open a new screen and put that ticker in, it's like fresh, right? Because I haven't really seen the ticker too much. Because as soon as I get out, as soon as all my runners are out, I literally close the screen out. And psychologically for me, it's closure, and I move to the next one. Because the one thing I can assure everyone is that there will be another rapid flow, there will be another Nimbus, and there will be another play, and more than likely that day.
Yeah, and I'm going to include a link to everybody listening about to a compound interest calculator that I think Tom was the first one that showed me this actually, to illustrate like whatever your starting account balance is. Let's say it's $10,000 and you're making 5, 7, 10% a day. You can see how much that would grow over 3, 4, 5 months. But you mentioned these rules that you set up for your rapid flow challenge. I have them up in front of me actually. I'm curious, how did you come up with these rules, and do you always stick to them, and do you always take every rapid flow alert?
I don't. They're guidelines. We'll say that. I wish I could say I stuck to them like glue, but sometimes you have a ticker with catalyst, right? And so I'm kind of letting those slide a little bit more. Maybe I go in a little bit heavier or whatever. But for the most part, I stick to the rules. As far as hold on, I'm actually scrolling up to there's my entry. So like rule 1, each rapid flow play up to max, and I had to change that because when I first started, I played 50% of the port. Right, $10,000. I played $5,000, but right now, honestly, it would be foolish of me to play $125,000 in one position. It just wouldn't be really smart. So I give myself the maximum of up to 50% up to a port, and I usually enter with a half position of whatever I'm playing that day. So today I determined my position because I started the day with 250,000. So I determined my positions at around a fourth of that. So was that 60-ish? And so I'm like, okay, so I'm not going to get into any more than 60,000 into a position. And I think the biggest position I had today at a point was NVIDIA. I think it was up at like 40,000 at one point. And I think Tesla too, for that matter, when I think about it. But those are really, really quick. As far as targeting 10% profits, that's still one of the hardcore rules I do. I like to see the candles. Obviously, we want to sell into a strong green candle. So a lot of the plays lately have been 11, 12%. And I've noticed that the rapid flows that fire in the morning, man, those things tend to run all day. The ones that fire in the middle of the day, I'm really happy with the 10% because a lot of times, especially with the chop that we're experiencing these days, it's sometimes it's hard to get to that 10%.
I just want to, because that's a great point. I saw a couple of times, like I think this week, there was an Amazon alert, and you exited with 7%, and a lot of other people lost money on that trade. How did you know, like sometimes to take the 7% and not to wait for the 10%?
So that was I remember that one. That was a midday trade. And I remember Amazon, it just didn't look healthy on the chart. And I was watching on the 5-minute chart, and it just wasn't. If you look at the volume candles, you look at where the price action is, you look at the candles in relation to each other. I use several of these kind of pivot indicators. I use MFI. I use a lot of these indicators, and all together, it just didn't look healthy. And so I was like, man, and Amazon was such a those are some expensive contracts. And so I think I already hit Amazon that day. Was it this week?
I think it was a couple days ago. Yeah, this week, I would guess. I just remember everyone else held it because it didn't get to that profit point, and they ended up losing money on that trade, but you took it at 7%. So I was like, oh, I wonder why this guy took it earlier than he usually does.
Well, it's actually, like I said, midday, sometimes I'll take, it's funny when I first did this, so my Twitter handle is Nomad Trader 8. I actually was going to do this with 8%. That was originally my kind of goal was, man, 8% is almost guaranteed on most of these things. But I've noticed, like I said, it's just the middle of the day. I remember that particular trade. I was honestly happy to get 7%. I probably could have pushed and got maybe 8.5, but I don't think that thing ever hit 10. But here's the crazy part. If someone held that thing, you would hit it the next morning. In fact, you would hit it more the next morning, which is the crazy part in all this, right? We're talking about a 1 hour timeline, right? And that's okay for me to do, right? Because I'm playing with a large amount, and so for me, it's about volume of plays. But for some of these younger traders, I mean, if that was early in the week, Amazon literally had a rapid flow, I think, every single day this week. So you could have, if it didn't hit, you could have literally sat on it on Monday or Tuesday, and you would have hit it this morning or yesterday morning or whenever that was.
Well, it's one of the things that I personally struggle with, and I know a lot of my friends do, is like actually cutting the losses and cutting a bad trade. So I've printed out this thing that Tom showed me where the bigger the percent loss, the bigger gain you need to offset that loss. So like, for example, if you lose 10% on a trade, you just need 11.1% on the next trade to get it back. But if you lose 40%, you need 66% to get it back. So I guess I'm asking you for myself and for everyone listening, because it seems like you're just ruthless. You take the profits, you cut the losses, and you're on to the next one. What is your advice for people listening that struggle with that just can't let it go? Like, I don't know what it is. I don't know. It's admitting defeat, or I don't know what it is, but it's really hard to cut it. You're holding on and hoping that you turn it a profit, and that ends up being very bad sometimes. So any advice there, how to deal with that?
I'm just as bad as everybody else at times. Nobody likes to take losses, but I guess for me, what really changed my trading style was realizing that there was going to be another play and just taking it. And and my stop losses are anywhere between 25 and 50%, but I will give it a chance to run, because I know several of my losses where I took big losses, like 40, 50%. They literally ran the next day. And so that's a really hard psychological barrier to get over once you see that. But you have to, I think, for me, you have to look at this as an aggregate. You have to look at this as you started the day with $1,000 and you ended the day with $1,100. And it doesn't matter how you went from 1,000 to 1,100, you just ended with 1,100. And so sometimes there's going to be losses, and most of the time there's going to be wins. But if you're consistent and play the rules and stick to your rules, you honestly should be fine. Like I know Tom started his auto trader on through the TFC, and it's been pretty. It sounds like it's been pretty cool so far. But I'm curious how the losses are going to. I'm curious how he's going to set up the stop losses and stuff in there, because a lot of times, like Apple's a great example for rapid flow. Apple is notorious for rapid flow comes out. People pile in and it just drops. And it did that today again. There was the Apple rapid flow that hit earlier today was the same thing. If you got in when it called, man, it dropped. I remember I bought the 155s, and they were like 90 cents or something like that. And I remember it dropped to like 84, 83. But because I was looking at a chart and I knew it was almost going to touch the bullish reversal zone, I basically average in right there, and then it started going up, and then I averaged in again. I averaged up and took a different strike, and so I was able to hit my profit goal much easier than people that just bought at the beginning and was waiting for it to come all the way back up. So, but to answer your question, the losses are definitely hard to take, but you have to also understand on some of these is some are going to be better to take losses. Like my big loss that I took, last week was LCID, and I knew I shouldn't have played it because it was right after it just exploded last week, and the rapid flow came out. But a lot of times it's, I think some of these rapid flows are people hedging their current positions, especially the puts, and sometimes the calls. And so that's why I think sometimes when these rapid flows come out, you have to look at the actual what it's being called on, right? If it's something that's deep in the money, whether it's puts or calls, a lot of times it's a hedge. In fact, most of the times it's a hedge. And so that's not something I really get into. I don't get into the meme stock. I think those things are they have their own kind of lifespan. And no matter what happens, it's someone's, they get on their Wall Street bets or something like that, and it just goes crazy. And you can't really control it. That's not controlled by, fundamentals and technical analysis. It's controlled by, the mob. So it's really hard to do that. Even though some of the rapid flows when they hit on AMC and GME have really taken off. So, but in general, I avoid those. And I avoid the puts because the puts haven't been the best on rapid flow. They've gotten a lot better. I took one yesterday, and I sold at close yesterday for 15%. I think it was I can't remember the name of it. It was hold on, get there.
I don't play the puts either. I just think generally
FIG. It was FIGS, FIGS. So it hit at the end of the day. But what's funny was if you would have held it today, man, that thing would have been 30-40% because that thing went all the way down because someone texted me about it. But I stick to I like the big tech names. I obviously love Apple, AMD, Amazon, Nvidia, and I also like when you get a ticker in rapid flow that you don't see, and it's a strike for a weekly that's maybe a little bit out of the money. Like today was Macy's, right? They had a giant catalyst because it was, they just made more money. They just reported more money than ever. And so that thing was taken off. So a lot of people, I remember listening to it even on live where they were hesitating to jump into that rapid because man, it's already gone up so much. So I took a smaller position. I was like, I'll still play it. And I hit 30% within literally 5 minutes. Did you get into Macy's?
No, I didn't play Macy's for the same reason. The hesitation got to me. Because even the Apple rapid play I didn't get into today because when it first went off, when I see it looked like it was like parabolic. It was just up, and I'm like, you know what? Realistically, how much more can this go? Clearly, I was wrong, but I didn't take it because I guess I second guessed myself. So for me, it sounds like you just take it immediately, but you keep some in reserve to average down if it goes down.
Correct. So now I take it. So, and I get it where you're starting off. I totally get it because you're basically shooting your wad right off the bat. And that's hard, right? I mean, you really have to be accurate. So for me, I'm basically playing like a fourth or even a third of a position. And I have a giant reserve that I can go and back that play. And I'll go, like I said, I'll go in either direction. If it's something like NVIDIA today, where it was just taking off, I'm like, heck yeah, I'm going to average up. Or where it was Apple, where I was like, okay, well, something triggered Apple. And I'm sure you've already started to notice that there's some of these tickers you have to be patient with. Apple, Amazon, Shopify, even Netflix. You just have to be a little patient. Or QCOM yesterday. QCOM yesterday was a great example. QCOM spike, and they kind of leveled off. And if you jumped in there, man, you got hammered because it dropped. But as soon as it wicked the lower support, it freaking rocketed right back up. In fact, you could have made more money if you average down than even when you went in initially.
Yeah, I find myself, I give myself more patience and leeway if it's like early in the week and I'm playing weeklies. But if you're doing like a 0 day or it's Thursday and it expires tomorrow, the clock is against you, the pressure's on, you're sweating. I guess people get a little bit more nervous in those situations, but I definitely give myself more leeway earlier in the week. I don't know if you do the same thing.
Yeah, no, for sure, true. But what I would suggest to those people out there that kind of sweat it is, I would definitely, if you're, look at the charts. Once you scaled your full position, set your immediate limit sell at 10%, because a lot of times, especially the tickers we're talking about, you wick on those all the time, right? Just like you wick stop losses. You don't even realize this, the ticker went down that low, but it just wicks and gets you out. But the inverse is also true. It wicks up and gets you your 10%. I've noticed Tom has done that the last couple of days, because sometimes he's like, man, I hit my 10%. I'm like, dang, I didn't even get to 10% yet. I'm like, it's 7, because it wicked up, snatched his order, and someone bought it.
I guess people are doing market orders, or they just want to get in or whatever, and it grabs yours. So I've had that same experience. You mentioned in the beginning that when you first started, your account wasn't growing, and obviously now it is growing very, very quickly. If you had to boil it down to like one or two main things, what is the difference with you now versus then? What clicked? What are you getting now that most people listening maybe aren't getting yet?
3 things. That's an easy question. I get asked that all the time, just like by my friends, just like I'm sure you get asked by your friends. Number 1 is accountability. You have to be accountable to somebody. If you're just there, do you play poker, Ismail?
I do play poker. I haven't played in a while, but I do play.
Okay, so when you're hanging around with your buddies, just kind of drinking and watching sports or whatever, you tend to splash around. And if you go to a casino and do that, you could win some, you listen, but 2-3 hours goes by and the house always wins. So that's number 1 is accountability, that someone somewhere is holding me accountable. In this case, it's my Twitter account. So the fact that I put everything on there, I know that I have to post these things. And a lot of times I don't want to just splash around, which leads me to number 2, which is over trading. Over trading is freaking one of the biggest killers of accounts. And it's funny, now that I post all my trades on Twitter, all entries, all exits, I've noticed a lot of times on the days when I think I'm going to do really, really well, because I've had all these wins, but I also had some losses, I don't make nearly as much money as like days like yesterday or today, where I had less than 10 trades. And this, I just make a lot. At the end of the day, I have way more money than I started with. On these days when I'm into like the 15, 20 trades, I don't make as much, even if I'm highly successful. It's crazy. So I don't even know what it's. I akin it to like your checking account, right? So I call it my checking account. It's like my black hole or a debit Visa, ATM. If you put $100 in there, or 1,000 or 10,000, it just disappears. Nobody knows where it goes. You just know it's gone. It's the same thing in this. If you just trade all day, all of a sudden at the end, you're like, what the hell? I thought I had, $10,000. Now I have 10,400. Wait, I knew I won more than this. But remember, the house always wins. So minimize the house advantage by just playing your high conviction things, which is number 3, to answer your original question, is I try to be as patient as possible. I try to be as disciplined as possible. And I try to go off my main alerts. Whether it's the rapid flows, the Nimbus, Super Fortuna, or what I like to call the McDoubles. So I listen to live all the time. And by the way, I coined that phrase. So don't let Tom tell you, because I actually coined the McDouble phrase. Because I'm always like, okay, so I love live, because just like you, I listen to it all day. I mean, for me, it's better than any talk show. It's better than CNBC. Heck, it's better than listening to music. And especially when I get to pick the music, not some of Tom's elevator music. My God, I want to go to sleep sometimes on that stuff. But aside from that, it's interesting, because you could be watching an alert, and for me, I'm very, very active, right? I'm not active necessarily trading. I'm active I'm active charting and updating my charts and looking at a lot of indicators and looking at minor flow, looking at major flow, and then looking at all these alerts and going across Twitter and just kind of reading all this type of stuff during the day. And I'm very, very dedicated to it. So when I start to see a ticker once, twice, 3 times, and I start to see minor flow coming in on it, so that means that's a lot of small purchases, but no offset on the put side, on the bear side. And when I start to see that, and then I hear a trader I respect, like Tom, say, "Oh yeah, I'm really looking at this one," and then I hear another trader I respect, like Avery, say the same ticker, dude, that is on the high alert for me. Then I go look at the ticker and see where it is in its channel, and see where it is in its, and if it's where it likes to be, I'll start a position. And a lot of times, I'm sure for the people that follow me on Twitter, you can see a lot of times I'll enter stuff and it's not attributed to rapid flow or Nimbus or whatever. Sometimes I'll just enter a position, and sometimes those are some of the most successful ones, because those are the ones that you're getting ahead of everything. And there's no better feeling than getting in on a trade and then a rapid hits. Oh my gosh, that's
happened to me as well, where like I'm about to take my profits and then the rapid flow hits, and I'm like, you know what? Let me hold on to this for a little longer.
Exactly. I was there today with, I think it was It was saying, I was like, I literally was like, okay, I'm gonna go ahead and take profits, and I was like, whoa.
So it sounds like you're not just listening; you're getting these Discord alerts, right? Whenever rapid flow, all these flows are constantly buzzing on your phone or tablet. So you're watching that, and you're also listening, and that's pretty much all you do to determine what you're trading.
Correct. I started, depending on where I am. I'm on the West Coast this week, so unfortunately it's freaking 6 a.m. So 6 a.m. I'm downloading the news. I'm reading everything. 6:30 I'm live because 6:30 I'm live and I go till 1:15 on the West Coast. But I am literally during that time. It's funny because that's why, going back to when we talk about my other businesses I hired operations managers in every single one of them and my number one rule is do not freaking contact me between the hours of 9 a.m. and 4 p.m. Eastern. If you do, I'm going to be pissed. So don't do it.
That's pretty sweet that you can have that set up. So I guess as we're wrapping this up, some last couple questions that I'd love to get your input on. What's next for the challenge? Like, are you going to keep going till you hit 1 million? Are you going to take some profits out for tax freeze? Like, what's next?
Yeah, I'm gonna try to push this to 1 million. I'm gonna see. I think I can get there by maybe mid 2022. All these guys want me to get there by December 31st, and that's just not going to happen. I mean, today was an awesome day. Today was, we added 13,000 to the bank today, which was cool. Five rapid flows, all 5 hit. In fact, I think this week I don't think there's been a loss this week. Let me look. Yeah, it's actually rapid flows are literally 1, 2, 3, 4, 5, 6. They're like 17 for 17 this week. I mean, it's
Do you have a spreadsheet where you're tracking all this for yourself?
Yes, I have an internal. I track everything. That's the only way I could feel, because I also want to know like what tickers are hot. Like Amazon, I told you, Amazon's 12-0. So today I have complete conviction. So maybe in a normal Amazon position, I take a third or maybe a fourth to starter, especially because the premiums are so jacked most of the time. But because I was so confident in Amazon because of its history this month, I went in like half position right off the bat, and it took off. And Amazon paid really well today.
You probably could get to 1 million a lot quicker, but I would assume
stop. I just want to.
I would assume that once you have an account that big, you get into liquidity issues with options. Like you can't put 70 grand into like some of these option plays that come up. There's just not enough liquidity for it. It's harder to get in and get out that full position. Maybe I'm wrong, but
No, you're absolutely correct. And so that's also why I really like because 70 grand in Amazon is not going to. I mean, I might actually set off at some point. We're teasing about this is if I have enough rapid flow followers, because I'm not sure if you noticed this, but like all of a sudden there's like this rapid flow cult that started now.
Yeah.
Both on Twitter and in Discord, and everyone's playing the same thing. So at some point, I could see us setting off our own alert, which would be actually kind of cool.
I wonder if that becomes like a self-fulfilling prophecy, right? Because you proved that it worked, and now you have this community that I'm assuming is only continue to grow, following the same plays. So it's kind of like inevitable that you will get the chance at 10% or more. You just have to take it. And I find that that's the most difficult thing. And I don't know if there's any easy answer to that. I like to think of it this way. You kind of alluded to this in a different way, but I like to think of the game is rigged against you. The options game is rigged against you. It's insurance contracts for existing stockholders. It's not for your benefit. So theta, all this thing decays it and eats it away if you wait long enough. Like you said, the house always wins. So you have to take the profits when they're there. Because if you don't, you're not going to end up winning in most cases. Like you have to.
Don't forget that it's not just not taking the profits, but it's the mental costs that you incur as well. Because then, and I see it all the time, traders, and I'm no different, right? When we see something go up to 10, 15, 20%, and we're like, damn it, I should have just taken the 10% because now it's back to zero. What are you doing now? You're literally just watching that ticker. And how many things are passing you by on the side? It is truly the epitome of opportunity cost, right? Because now you're spending all your mental energy and mental capital thinking about what could have been, what should have been. And man, I should have just done the 10. I should have just done the 12. I should have just done this. Oh, it'll come back. It'll come back. It'll come back. And it never does.
I guess we talked a lot about this throughout this conversation, but is there any, in summary, towards the end, is there any general advice that you have to beginner traders or people listening that are trying to get better on how to get better? You mentioned the 3 rules. I don't know if there's anything else you want to add in general
think that,
as parting advice to people.
I've been defining my own set of rules, but I remember I tease everybody that rule 7, right? My rule 7 is don't look back. Once a trade's done, a trade's done. Just move to the next one. You spend mental capital doing that because, and especially for newer traders, I can't stress that enough. They spend way too much time on what should have been, what could have been, versus, okay, cool, yeah, I screwed that up. Let's learn from it. Let's move forward. Or, hey, I got 10% profits. Yeah, it's not 20% or it's not 50%, but it's not zero. The other thing too is, and I think I talked about this earlier, is please get an accountability person. Get an accountability partner, get an accountability group. I don't care what you do, but you have to be accountable to somebody other than yourself. The thing about trading, and you and I talked about this, it's nice to feel part of a community, even like a TFC, because of the live. You feel like you're part of a group, and you feel like that you can share the anguish of losses, but also the thrill of victory, and you can share that with somebody, and it's that much better. But number one, freaking don't be greedy and stay fluid, because you hit it on the head. This entire house is not built to make you rich. It is built to make you poor. So stay fluid, don't be greedy, take profits when they're there, and compound your gain.
I think that accountability is like a sleeper advice thing. I've actually toyed with the same thing where, like, when I put my TikTok clip up and everyone's like, all right, so you do it, bro. You can't do this. And I'm like, I've done it. So I know you can do it. But putting it out there, making an account and having to show all your trades, that accountability makes you act differently. Like, you won't get as risky because you know that if you have a huge loss, you're going to have to post it, right? People are going to be like, yeah, what'd you do here? Why'd you do that? So that accountability, I think, is really huge. I wish more people would post their stuff publicly. I know it's scary. And I know that in the Discord, there's like a whole rapid flow challenge chat that there's a lot more people now posting. And I see a lot of honesty too, like some people taking losses as well. And they talk about what they learned and why they won't get that loss again in the future. But I think that accountability is really a big thing.
No, I agree. And you're right. Like, I made a dumb play. I was like, I got caught up in the BABA freaking euphoria. I'm like, hell yeah, that's going to beat earnings. And so I had a great day today. I can't say I didn't have a great day today, but it could have been magnificent had I not had to eat BABA right off the open. And there's nothing that I hate worse than when I have to do my opening morning Twitter remarks and be like, yep, going to get my ass kicked in BABA right out of the gate.
Yeah, but you take it like a man, right? A lot of people would just not take that, and then it gets worse.
Yeah, no, when you know it's a loss and it breaks support, you've got to cut it. I don't care what it is, you have to cut. But that leads to education, which I'm so, I'm thrilled that you're doing these type of educational podcasts, because you have to learn about supports. You have to learn about EMAs. You have to learn about reversal zones. You have to learn about supply. You have to just have a basic knowledge of the stuff, because it's going to help you not just know when to cut, but also know when not to sell.
So on that note, I'm curious, because a lot of people, they look for alerts. I want to follow the Twitter guy that just tells me what to buy. Like, they don't want to learn anything. They just want the alerts. Tell them what to buy. I'm a big believer in giving people what they want, so you can give them what they need, right? So you have to give them that, but you also educate them. And that's what I personally like about TFC, and we talked about it a lot. So I guess asking you, for people listening who are considering, joining the Discord or joining the Financial Cloud, who is it a right fit for? Who is it not a right fit for? How would you think about, potentially joining something like that?
So I think they charge like $80 a month now. Man, I pay whatever it is. It's on my Visa. It's the best. Honestly, I pay $200 to follow some of these other FinTwit guys. I think my total monthly bill these days is around $1,000 across everything, right? And for all the things I follow, because I'm a data junkie and I want as many points of data as possible. But TFC, at whatever they charge, $80, it's honestly, it's kind of a joke, right? I'm like, dude, you guys, for TFC, and you maybe cut this part out and don't tell Tom, but honestly, I pay $500 a month for that, because it's worth it. You literally get that in one trade. And then my counter to that would be, if anyone is trading options and can't afford $80 a month, they probably shouldn't be trading options to begin with, in my opinion, because it's really geared, and they have so many rooms, and I totally get it, because I see a lot of the conversations. When you first get in there, it could be a little overwhelming, but I know they have a guy in there named Darian now that's really, really good about, onboarding people. When people come in, they can get to Darian. He can kind of show them around, and you can kind of tell them, hey, so I'm a long-term investor. I have a day job. I would love to day trade, but I really can't. So maybe I really like the Nimbus alerts because those take a little bit longer to play out, or the Super Fortunas. And Darren can kind of put you into whatever room that is. I've noticed that. And, or there's other people where they're like, no, man, I'm at home. I work night shifts, so I can day trade, or I can get in and out. And so, you're in the rapid flow. You want the rapid flow room, you want the unique flow room, or all these other type of options. I guess the point in all this is it really can fit everyone's style, but just understand you can't do it all. And so that would be back to your question 2 questions ago, which is what would you advise as someone considering this is when you get in TFC, it's literally like drinking out of a fire hose when you first get in. Now, what's coming out of that fire hose is the best, whatever your favorite adult beverage is. Mine happens to be whiskey, rum, and wine. So it's literally like this, like freaking fire hose firing off Pappy's whiskey. And I'm just like, oh my God, I can't get enough, but I can't drink it all. And that for me was very, very, it was an inflection point for me, where I was like, I want to just focus on 2 or 3 of these things. And so for me, I pick Rapid Flow, Nimbus, the Super Fortunas, and the live trading. The rest of them are really, really cool. And I use those for support. And I use those for, to like kind of, I see spies moving. I see there's a lot of call flow coming in. So that's going to support this, whatever. But as far as actionable alerts, I, as a new person in TFC, would keep it. I would start with 1 or 2, see how you like that, and then maybe bring in an extra one. But even at that, honestly, for me, just the rapid flows are worth whatever if they came out tomorrow and said it's $1,000 a month just to get rapid flows, I'd be like, here, I'll only pay a year in advance so I can make sure I have this. It is, for me, is by far the most lucrative thing. Obviously, 10,000 to 266,825 in 87 days on pure alerts and obviously money management. Man, that's a crazy number.
It's amazing the day and age we live in, because I remember, I don't know how far back you go into investing, but like this stuff wasn't around before. There wasn't FinTwit, there wasn't Discord. I'd be reading books that no one wants to read because they're so dry, trying to figure out how to, like Benjamin Graham's Intelligent Investor, how to analyze stocks to buy and try to get 10, 15% a year. And I was just remarking to one of my friends, like, these guys in the TFC are literally on live all day trading 9 to 4. And then afterwards, Tom is doing another session about short squeeze potential ones. And then you have these other guys doing other classes right after the market closes. It's like nonstop. These guys eat, live, and breathe this stuff. And like a few people I interviewed so far are more older, successful business people that are members. And I'm always curious, like, does it bother you taking advice from these younger guys? I know the answer is no, but I know a lot of people would be like, what does this kid know? They know a lot.
They
right?
do.
So, yeah.
They and I'm glad you talked about it, because so I joined TFC in I think it was February of this year. And, they've come so far. Some of the people they've added recently, like Sig, that guy reminds me of like a professor, right? And he's just so deliberate with everything. And I love him. He is incredibly knowledgeable. And Dapper, which I think is actually one of the best educators on there, other than Tom. And he is just so selfless. And he hosts class daily. And he's always stopping, not just to tell you the answer to your question, but kind of delve into why you're asking that question. To be honest, last week, I was like, what are these supply zones that you're using, Dapper? They're different from mine. And he took the time, via message, and he really kind of outlined it for me. We talked about wicks and the 1 hour candles, going back a week, and I started to change my supply zones and my pivot zones to those. And it's been a world of difference for profitability, because I don't use those to enter, I use those to exit, because those are obviously a natural support barrier or resistance barrier. And so as my plays get there, especially with my runners, I'm using those to exit. And I've never been as profitable as I've been in the last 2 weeks from a percentage wise. And I attribute a lot of that to Dapper. I mean, he's been amazing. And obviously there's Avery and Air Drake on the daily, on the live. They're tremendous. You get Tay that pops in there every once in a while. I'm not sure yet. Tay's like, when Tay pops in, he's literally like the jackpot guy. That guy has the freaking magic touch. I'm like, holy crap. When that dude comes in, you better pay attention, because he's dropping some sort of banger, right?
It's so true. Like, he's barely there, but the one time he shows up, he calls the best play of the month or something.
I don't even know how he does it. I'm like, Tay, you have someone on the inside, right? But to answer your question, they've all been it's been an incredible experience. And and I'm still learning, right? And to answer your question about trading, I mean, like I said, I traded my first option in January of this year, and I'll never forget. I thought I was being cool because it was still during pandemic time, so I bought like my first option I ever bought was Southwest, and I bought it a year out. I didn't know what a leap was. I just said, "Oh my God, Southwest! Of course it's going to come back." And I got bored of looking at it, and I was like, and eventually I sold it, right? But it didn't maximize it because it went up, but I didn't realize, when you buy leaps, it didn't go up as much. Anyway, I've learned a lot. And to answer your question, I couldn't even imagine trading without Discord or without these alerts or without all these young guys. This retail trader phenomenon is here to stay. And because I was the guy that was in real estate, much like you, and I was, when I was curious about equities, trading equities, a couple of years ago, it was, oh, I can't get into that. That's way too much. My God, I don't understand all these type of things. I'm just going to leave it up to my stock guy. Now my stock guy is actually asking me about rapid flows. I mean, so that alone should tell you. I'm like, dude, get my money out of your account. I want to invest my own money now. Yeah.
It's so amazing, like the ability to tap into group wisdom, right? Because it's not just, hey, you asking one friend. It's literally like 200 people trading together, listening to the same guys, sharing things, commenting. I just wonder what that says for education going forward. Like, it's just a whole new way of learning collaboratively. So colleges and stuff like that, maybe in a little bit of trouble with this new trend.
I agree. And I think we touched on this earlier, whereas, the generation before this generation, very competitive, right? If you had an upper hand in something, or if you had an edge, or if you had a core competency, you're not sharing that. You're holding that. You're hugging that so tight. It's like puppy death syndrome. You love it so much you kill it. But this generation now, this trader, all these 200 traders we hear live, so unselfish, so collaborative in nature. They truly want everyone to do well because they are true. They're always about the 2 + 2 = 5 group mentality. They're like, it's not about me. Again, if I can help someone else win, it actually helps me win. And I can't stress that enough.
It's amazing. I don't know why they're like that, but I'm glad they are. So I guess the last question I ask everybody, and I'm curious to hear this from you because you seem well-traveled and have a lot of life experience, but we talk a lot about money, and the podcast is called Bound to be Rich, but a rich life is not only about money. So I guess, what is a rich life to you?
Honestly, I'm living my rich life right now, which is I want to do what I want to do on a daily basis. I don't consider trading work. It's actually fun for me. I used to be, obviously, I love sports. I used to be obviously a professional gambler. I used to play in these big fantasy football leagues for a lot of cash. And I always felt my analytical nature could really change that. But anyway, I'm able to find something I'm passionate about. I love trading. I love, kind of the nuances of all of this. But a rich life is being able to do what I want when I want to do it. The true flex is freedom to do what you want, right? And like, I have businesses, but you know what? I want to do this, so I'm going to hire someone to do it. Cool, you do that. And you know what? I want to go to Switzerland this week. Great, I'm going. I want to be on a houseboat last week. Okay, I'm going to do that. I want tacos for dinner. Cool, DoorDash. Whatever the case is, that to me is a true rich life. And to cap it all off, the cherry on top is legacy for me, right? If I can, so like, I've had 3 mentors in my life that I owe everything to. And I, in turn, want to be able to positively affect other people. And that's another guiding thing for my Twitter was, hey, I'm never going to monetize it. It's always going to be about, hey, these are my trades, cool. And I actually take the time to try to answer people's questions the best I could, but knowing that I'm still learning too. And I'm not sure if you follow, but like, I was so happy to say we got someone that reached out from Norway. So I'm like, yes, Nomad Trader is now international. We got a guy from Norway. That. I mean, how awesome is that? I'm like, dude, I'm going to Oslo. I'm actually seriously considering going to Oslo just to trade from a cafe in Oslo.
That's the great thing about this social media world. Like, hey, if you ever come out to New York, next time you're in New York, let me know. I'll treat you to a gyro on Broadway.
Dude, I was just there. I don't know if you saw. I went, so on my way back, I was like, I'm gonna go. I connected at JFK and I actually pushed my flight out, because that's another thing about living a rich life, is doing what you want when you want to do it. I'm like, you know what? I'm gonna stay a couple days in New York and I'm gonna go have dim sum, and I'm gonna go to a rooftop bar and I'm going to make a trade. I'm going to do a rapid flow trade in front of Wall Street. And we did. And so I did. It was actually awesome. It was Apple, and it was, it was 10%. But I was on my freaking phone, said how my stuff went. So I was like, just get my 10%, just so I can say I did it. I'm out. Right?
I wish I knew. I don't live too far from JFK.
Really?
I used to work a couple blocks from the stock exchange as well on Wall Street. So I'm familiar with the area. I know all the good places to eat. So next time you come by, make sure you let me know. But I'm so grateful for the conversation. I hope people got a lot of it. I know I personally got a lot out of it myself, and I'm glad that you're doing this because, like I said in the beginning, there's all these gurus online talking about these amazing plays, and I always wondered, these guys that actually make a living trading, how much profit are they making? What is the time to get out? Are they going for the 80% moves? Are they going for the 2% moves? What is the appropriate profit level? And I think you're answering that with showing what you're doing day in and day out. So I'm grateful for that. I know people in the Discord are grateful for that. And hopefully listeners check you out. And I think there's a free version of the Discord too that people can maybe join into. That I'll link to everything in the show notes. But Nomad, thank you so much. I truly appreciate you spending the time with us. Really, really valuable.
I appreciate it. Thanks for having me. And hey, happy trading. And as we always say, stay fluid, my friends.
One quick reminder before I let you go to join my email newsletter. It's going to be like a personal note for me to my friends of all the cool things I've come across that month. From hacks and tips, interesting stories, products, books, ways to make money, and who knows what else. It's totally free, and if you don't like it, you can always opt out anytime. The link to join is in the show notes, and I hope to see you on the list. And there you have it. If you enjoyed this episode, please remember to leave a review. I may even give you a shout out and read yours out on the show. For any and all resources that we discussed, check out the show notes or head on over to boundtoberich.com. Until next time.